Okay. Okay. Good evening, ladies and gents. This is the second time. Tweede keer wat ons 'n bietjie live gaan. Dankie, Faya, dit gaan baie goed met my en hoe gaan dit met jou? Ek hoop ons gaan vanaand weer 'n lekker chat hê soos verlede week met 'n klomp vrae. Ek sit hierso en ek weet nie wat om met julle te bespreek tensy ek die vrae het nie, so ek dink ek gaan met een ding wegval vandag. En die eerste ding is beleggings, investments. There is a lot of misperception with regards to investments, and when I say there's a lot of misperceptions, people do not understand how different investments work. They don't understand why they should have different investments. They don't understand why they should diversify in investments. So just a couple of quick things. When it comes to investments, we always have to decide how long we want to invest for, how much risk we're willing to take. And then once we have decided that, then you have to go and choose an investment based on the time factor that you're going to be investing for, the risk factor that's going to be taken into consideration. And then, of course, one of the most important factors is the tax implications of the different investments. So if you ever wish to make an investment and start saving, if it's only going to be a couple of bucks here and there for saving for emergency funds or building up a little fund or whatever the case might be, no problem. But if we are talking life investments where you are trying to make provision for later on in life, get some education. Make sure that you understand these things or get some guidance. So that was just quickly as introduction. And if I heard you asking, please comment on building up over contributions to an RA over time. And how does this help in retirement? So over contributions, and I think what you're referring to here is with regards to how much you can contribute onto retirement provision. So legislation says you can contribute as much as 27.5% of your gross income towards pension funding investments. That's retirement annuities, pension funds, and provident funds. So on 10,000 Rand, you can contribute as much as 27,500 Rand per month. So if you contribute that, that's the maximum that SARS will give you a tax rebate on a yearly basis. So if you over contribute, if you are contributing 30 or 35 or 40%, then what happens is SARS only gives you a rebate on 27.5%. And then later in life, when you get to retirement, all the over contributions that you've made, you can now claim a bigger lump sum, tax-free. So remember your tax-free portion at retirement, the one-third tax-free portion, you can get up into 550,000 Rand tax-free. So at that point, all these over contributions can be calculated in and you can get a bigger 10,000 Rand once again in retirement. And you have to pay tax on that 10,000 Rand. Then SARS says, okay, but out of this 10,000 Rand, 1,000 Rand is part of these over contributions. And therefore we can't tax him on that because he never got his rebate. So therefore, instead of being taxed on a 10,000 Rand, you now only get taxed on 9,000. Can you recommend a financial plan to save up? Yes, Zeus. We actually just touched on it as we started. So I'm a big fan of retirement annuities, and the reason why I'm a big fan of retirement annuities is that if you go and look at the rebates that you get on retirement annuities, you are already getting money back from SARS for being a good saver. So therefore, if you are contributing 1,000 Rand a month, and then let's say you're on a 31% tax rate, SARS says, I'm going to give you 31% of those 1,000 Rand that you put in back. So at the end of the year, on your 1,000 Rand, there's 1,000 Rand in your retirement annuity, SARS gives you 310 Rand back, and I say you can do with it as back into your investment. You're sitting with an investment that's got 1,410 Rand in it. So in 1 year, you have gained 41% return on your investment. There's not many investments that can give you that. They are few and far between. But that's the first thing, is the retirement annuity. Zeus, I really believe in that. Then you can go and look at things like unit trust, endowments, life investments, which is basically an endowment, a LISP investment, which is basically a unit trust. You can look at alternative investments these days, arbitrage, future forex arbitrage, and then there's a whole list of other investments which I do not really like, but what one can do, you can go and buy shares. You can go and buy shares and buy and sell shares. You can go and buy property as an investment if you are that way inclined. You can buy gold. You can buy diamonds. You can invest in a company. There is so many different types of investments and opportunities. I made a video of this once, and I just listed within like 10 minutes between me and advisors in my company. I listed all the different investments we could quickly think about. And then I made the video where I poured out these pages. And within a 5 to 10 minute conversation, we had more than 55 investment products that one can choose from different companies, different spheres. I believe that one cannot be a specialist on everything. And therefore, I prefer to keep to these investments that I've just mentioned to you. Retirement annuities, life investments, LISP investments, bit of alternative investments. But in order for a person such as yourself, who is a consumer, a person that, and from the tax point of view, that's where the financial advisor really earns his money. That's where he really earns your trust, is by giving you proper advice and making sure that because of the structure of investments that is given to you, you will have the best possible results at the end of time in terms of growth and tax efficiency. I hope that helps, Zeus. Thank you, Zilla. Much appreciated. You're breaking up. Maybe a bad signal. Yes, Zeus, it's very possible. Yeah, where we are in Krugersdorp, there is some heavy weather at the moment. So I'm just going to have to push through. And yeah, if need be, I'll have to answer some of these questions again. But unfortunately, I know about it. Nothing we can do when God decides it's time for us to get a bit of rain, eh? Thank you. I'll start up at the end of the year. Zeus, don't wait for the end of the year. That's one of the biggest mistakes that people make, is they say, I'll start tomorrow. I'll start next week. I'll start next month. And that's not only with investments. That is with a new training program, a new diet, studying, whatever the case might be. Start tomorrow. Start tomorrow. Don't wait. Because from delay comes the fact that you then completely leave it and you don't do it. Start tomorrow. Sorry, I see there's one message, and must be honest with you guys, I don't know where to go and find these messages. If I don't see it in the live chat and I don't see it, I'm still learning this little effect. So help me out and tell me what it is that you put in the message there. Okay, anybody else that's got any questions here? Come people, help me out, help me out. I can sit here and try and talk to you all night about all different kinds of financial planning and advice and whatever, but it really becomes boring if I'm talking about stuff that you don't want to hear about. So pop in a couple of questions and let's see what we can advise you on, or what we can help you with. Let's see who's next. What do we have here? Zella, I'm glad that I opened your eyes. Make sure you get somebody that can advise you. Don't be scared, people, of talking to a financial advisor. A financial advisor is exactly the same as a doctor, a dentist, a lawyer. If you need to find out what is wrong with you in terms of sickness, you're not going to try and diagnose yourself. You're going to go to a doctor. You're going to get a specialist opinion. Yes, if it's only the sniffles or a sore throat or whatever, you've got a fair idea. Every year I get flu around about this time, so I'm going to have to drink some Advil and ACC 200 and whatever. Perfect. That's you educating yourself slowly but surely in terms of your own health. But when that gets worse and you now need to get antibiotics or something, you're definitely going to pay a doctor to go and see them. Financial advisors in general does not charge people for consultation fees. So if you go and see an advisor and he consults with you and he gets your information, he does a plan for you and he presents it to you, all of that is normally done free, gratis, and for nothing. It's only when that advisor actually implements anything, any product that he suggests that you take up and you say, yes, I want to take this up. It's only then that the advisor earns something. And then he earns commission from the product. You don't feel it. You don't even have to pay it. And you know what is the great thing about this is that, especially when it comes to things like Outsurance and Platinum Life and those direct companies, people say I can go directly to these companies, I can buy directly from them, it's not going to cost a cent. You think they don't charge commission? They might not be charging commission, but have you seen how many ads these companies run? That money must come from somewhere that the direct companies need. So what they would have paid to an advisor in terms of commission, they are still withholding because they are now using it for their own marketing strategies. The wonderful thing about advisors is you can go and see 2, 3, 4, 5, 7 different advisors and get advice from all of them. And you decide at the end of the day, who is the person that you trust and who do you want to work with? And then you also decide whether you want to actually take up the products. And it's only at that point that that advisor is going to earn anything. And like I say, you're not going to feel it. So make use of a specialist. Okay. Okay. Just got the number, whatever that is. Number 1 gifter. Okay. Cozy K. If I invest 500,000 Rand in Nedbank Platinum Invest account, gives me 6 to 8%, does it mean I can what? You can. I don't know exactly what it means when you say that I can. But here's the thing. If you take 500,000 Rand, you go and invest it into one of those savings accounts. Fantastic. You know that you are pretty safe in knowing what you're going to get as a return on your investment. So that is fantastic. The problem that I have with bank investments is that whatever you earn in terms of return here. On 5,000 Rand, it's not that much, so it's not such a big problem. Because on 500,000 Rand, it's going to be about 25,000 Rand for the year, if we're talking about a 5% return on your investment. You pay tax on the interest. So on 500,000 Rand, if you get 25,000 Rand interest on that investment, then 23,400 Rand, am I right? Am I wrong? Let me double check before somebody calls me out again here as lying about it. 23,800 Rand. You get 23,800 Rand of that 25,000 Rand tax free. The other 1,200 Rand you have to pay tax on. That gets added to your salary and that pushes you into a different tax category depending on what your salary is. Could be the same tax category, but you will be paying tax on it. Can't get away from it because the bank is by law obliged to send SARS a tax certificate at the end of the year to tell SARS how much you've earned in interest. So like I say, on 500,000 Rand, not a big problem. It's a small amount that you're going to be paying tax on. But just imagine if you start earning 70, 80, 100, 200, 300,000 Rand in interest. Then you've got a substantial amount that you're paying tax on. It can seriously influence your tax bracket. So this is my take on it. A person should have 3 to 6 months income in the bank. That is basically it shouldn't even be negotiated. You should have 3 to 6 months income in bank in terms of savings. That's your emergency funds. And I've calculated this on numerous times based on the current interest rates. Up to about 300,000 Rand is still good because then you are still just below or just above the interest, the tax brackets on the interest. But anything else that you wish to invest or want to invest, go and invest it in a different investment. Go and put it into a life investment where whatever tax needs to happen happens within the fund. And the portfolio manager takes care of that for you. And because the portfolio manager takes care of that for you, you don't feel it, you don't see it. And it's normally less than what you would have paid in your personal capacity. So when you start getting the money out of that life investment, it's after tax money. So it's effectively tax-free money in your back pocket that you can take. The other thing is, banks normally gives you a high interest rate, the bigger the amount and the longer it's invested for. So if you go to a bank, you've got R1 million, you're going to invest it for 5 years, great, they'll give you 10, 11%, 11.5%, whatever the case might be. That's fantastic. But now you sit with 5 years of tax problems that you've just created for yourself. If you take that same R1 million and you go and invest it into a life investment, and you get a 9% return on investment, that 9% return on investment is after everything. It's after costs, it's after taxes, after everything. So you walk away with a tax-free return in your pocket, tax and everything taken into consideration. To me, that works substantially better. And based on historical evidence that I've seen, you are always going to earn better in terms of growth in portfolios than what you're going to get in terms of interest. I have done this some numerous times, and I cannot recall once that a bank investment proved to be better than a life investment that I could give for a company. So Cozy, I don't know if I've answered you there, but I hope it's in line with what you were trying to get at. So Stingfinger, I'm trying to figure out what all these roses is, or gifter badges and whatever. Does it mean money in my pocket at any stage? That's all I want to know. Okay. Okay, is 400,000, what was that? Hang on a second, I lost something here. There we go. Is that 400,000 or 4 million? 400,000 K in retirement funds on the right path, age 32. Zeus, very difficult question to answer. And the only reason it's difficult to answer is depending on your income. Somebody earning a big income and sitting only on 400K now, to them, they are in trouble and they need to make a plan. For somebody that's earning a smaller income, or a small income, 400K might be fantastic and they might be way ahead of where they should be. So at the age of 32, I think the question you should ask yourself is, when did you start saving? Okay, this is an easier way to determine if you're on the right path or not. You should start saving for your retirement between the ages of at least 24 and 28. That's it. From there, that's when you have to start saving. And then, and here's the kicker, you have to put away 15% of your gross income. If you do that, you are well on your way to a good retirement. You're at the age of 32 with 400K in your retirement funds. I'm sure you're pretty much there or thereabout, but I can't tell you unless I know what your income is, what age you want to retire, how much you want as an income at retirement. All those factors is what needs to be taken into consideration or in order to give somebody an answer. And that's what I do as a financial advisor. I take all your information, I talk to you about what your wants and needs are, and then I use that information to go and work out and say, yes, you're on the right path, or no, you're not on the right path. Let's work on a plan to get you there. I hope that answers it for you, Zeus. Capital gains tax, it's taxable. KG property guy, not sure what you're referring to here, sir, but yes, there are a number of investments that does have capital gains tax. That's in that makes up part of it. Property investments, capital gains tax. Some alternative investments, capital gains tax. Some investments within the fund, capital gains tax. Agree wholeheartedly. I think that the important thing is to go and see how capital gains tax is going to affect you as a person depending on the type of investment that you're in. Okay, so let's move on. With the new system, do people still qualify for the old age government grant? Yes, Ben. We will always qualify for the old age government grant unless something extraordinary happens. But here's the important part with regards to qualifying for that. Number one, you either must not have any income to qualify. Number two, if you do have an income, you can still qualify. but there is a formula that they work on to determine if you qualify, and then if you qualify, how much do you qualify for. So if you are one of the lucky few that has saved up enough money and you've got a reasonable income in your retirement and you're pretty comfortable, chances are you will not qualify for it, because you will not be falling in those limits that qualifies for that. Okay. Let's see what's next. What is a life investment? Dells. In the old times, if I can call it that, it used to be called an endowment policy or an uitkeerpolis. So that's what a life investment is. It is basically a product where they give you a basket, and this is the easiest way that I can explain it. It's a basket. See it as a basket that you put your money in, but your money does not go in. Your money goes into this basket in the form of portfolios. So see portfolios and unit trust as eggs. You can go and choose a variety of portfolios. You could go and say, okay, I like international investments, so I want a global equity fund. That would be one of the eggs. I like a money market fund and I want some money there just because I want a bit of safety. That would be another egg. And so you like gold and mining, so you can go and choose a golden mining fund. That will be another egg. So that is what an endowment is. It's this basket full of eggs. The eggs represent your portfolios that you invested in, and your money gets invested in there and grows. And how your money will grow will now determine on your portfolio. So let's say you've got 3 different portfolios that you invested in. One portfolio gives you 8%, and here we assume that you are splitting your money equally, 1/3, 1/3, 1/3. So one investment gives you, one portfolio gives you 8% return on investment. The next one gives you 10% return on investment, and the third one gives you 12% return on investment. So your average return on your investment will be 10, because it's 8, 10, and 12, and it's 1/3 each. So it's 10% that you will get as a return on investment. But, and here's the but, the 1/3 that's earning 12% this year will be worth more than the other 2 that earn 10 and 8%. So next year, that portfolio, if it still gets 12%, will now not only increase 33% of your portfolio by 12%, it will now increase, let's say, 36% of your portfolio by 12%, because there's now more funds in that. And so even a portfolio which is divided into different, or even an endowment life investment which is divided into different funds, you will see better and better growth over time, depending and reliant on the portfolio that's doing the best within that investment of yours. Okay, hope that answers it for you, Dells. Where do I get life investments? Old Mutual does that. Yes, GoZK, you are right. Old Mutual does that. And once again, if you're going to contact them direct, Old Mutual is going to say to you, fantastic, we can help you. How much do you want to invest? How long do you want to invest for? Do you want to commit to a term? Which portfolio do you want to invest in? And you're going to have to give them all the answers with regards to that, okay? If you don't know, because you don't specialize in it, once again, it will be better for you to speak to a financial advisor and the old swear word, a broker, and ask them for some guidance and to help you to put together a life investment that will be suitable for you with the right portfolios that is suitable for you. So that would be my advice to you. Do that. Oh, Mpo, I just explained how life investments work. You take your money, you invest it into a fund, you get growth on that investment, and the growth that you get on that investment happens within the fund, and whatever the value is at maturity or when you want to take it, that's what you get. The growth on these type of investments are normally better from both a growth point of view and a tax point of view than what you would have gotten in the bank. Okay, so let's see what's the next one here. Okay, now there's quite a number of people that wants to ask something. Okay, there was the live question. Let's just see the next one, folks. Just be patient with me. Max, you say Namibia doesn't have capital gains tax. I'll have to speak to my mates in Namibia and see why they are so lucky. Do you advise to pay off the mortgage if I rather invest the money somewhere else and leave bond as is? So KZK, this is a mathematical thing that one has to go and calculate. And when I say it's a mathematical thing, it depends on what the interest rate is that you're paying on your bond, how long you still have to pay on your bond. And based on those factors, you can go and calculate how much the interest is that you still have to pay on the bond. Okay, so that's the one portion. So let's say you go and do this calculation, and the bond calculator says to you that you're going to pay 600,000 Rand in interest over the next 10 or 20 years. Then you go and you say, okay, how much will I gain in terms of interest that I will pay less if I pay more? So either I increase my contributions or I put lump sums in. So let's say you increase your contribution in your bond repayment and you redo the calculation, and it now says to you that the interest that you will now pay is 400,000 Rand. It means that you've just saved yourself 200,000 Rand in interest repayments because of the higher premium that you're paying on your bond. So how do I know whether that's the better option or whether I should rather invest my money into a different investment? So this is what needs to be done. You've now calculated how much you're going to save yourself in interest. Now you're going to do the calculation to see how much you could potentially get as a return on an investment that you just put your extra money into every month. So if that bond calculator showed that the extra contributions would save you 200,000 Rand in interest, and the calculator that you use to see how much the growth will be on the investment shows that you will be getting 250,000 Rand in growth, then the investment is the better one because you're going to get 50,000 Rand more growth than what you would save on interest. And vice versa is exactly the same. If the investment shows that you will only save 150,000 or get 150,000 return, but you will save 200,000 Rand on bond interest rate, then the bond is the better one. The thing is, with regards to calculations, we can go and do it over and over and over. There's always variables that comes in. Your bond might be on 11.5% interest rate today, but in a year from now, it's on 10.5% because the repo rate has been lowered a few times. Then that interest saving is not going to be the same anymore. Similarly, with the investment that you've done, you've calculated the growth of 9%, but at next year, you're actually seeing that you're getting 8% or 10% return. So it's either more or less. Then that changes. So there's always variables. And this is one of the things that I like to advise people. I like to tell people, go and look at those calculators to give you a guideline. But at the end of the day, when you have to make a decision whether you're going to put it in your bond or put it into investment, what you must then do is go into what your heart and your brain tells you. What is going to make you sleep easier at night? What is going to give you more peace of mind? If it's going to give you more peace of mind to pay off your bond quicker, that's what you do. If it's going to give you more peace of mind to say, okay, I'm going to get an extra 50,000 Rand in growth, and I would rather have that than the bond that's paid off quicker, then that's what you do. Follow your heart and your mind with regards to what will give you peace of mind. Never the same for everybody. It's amazing how people react and act differently once they have paid off their bond and they don't have house debt anymore. Okay, so let's see what's next. Why are so many people pushing MLM so lame in 2024? MLM? Sorry, I know a lot of acronyms, but I'm not sure I know what MLM is. MLM, just a quick Google search tells me MLM logistics, MLM bands, MLM companies, marketing. Okay, so Stevie, pop in. What does MLM stand for? Because I'm lame now, not knowing what that abbreviation is for. Sorry. On previous question, earning 17K, been working for 10 years and want to retire at 55. Bad or good? I think you're looking pretty good considering the previous question that you've had. I would, however, not advise you to work on 55 as a retirement age, Zeus. I know people don't want to hear this, and people don't believe me, and people say I'm talking nonsense, but we are living longer. We are unfortunately living longer. The first child that's going to reach the age of 150 has, according to science and statistics, already been born about 15 years ago. So this is the problem. People want to save. Let's say, okay, you've now been saving for 10 years, okay? So from about the age of 25. You want to save from 25 to 55, 30 years, 15% of your income, and then you expect that 15% that you save for 30 years must now last you for 30 to 40 years because that's how long you're going to be retired. There is no mathematical sum in the world that you can do that can get you to that point. And that is what people don't want to admit to, is you have to save substantially more to retire earlier and to have an income for a much longer time. If you are only going to do your 15% savings, trust me, work on a 65 retirement age earliest and you should be okay. Work on 55, you're going to be able to retire, but man, you're going to struggle financially. I'm talking here out of absolute experience. I've seen it. I see it in my own family. I see it with my dad. He refused to listen to me, retired at the age of 55. They're 75 years old now, and financially they are struggling because his capital was not enough to carry an income for that long. So just keep that in mind, eh? So life investment kind of works like the S&P 500. Max? Yes and no. Yes and no. And why I say yes and no is the S&P 500 is an index. We've got the JS. Actually, I had a long discussion with a gentleman yesterday about the S&P 500. A lot of people want to invest in the S&P 500. So what is and how does an investment in the S&P 500 work? We call those a passive fund. So what they do is they take this index, S&P 500, and they say all these companies are in the S&P 500. And every company, depending on its size, is a percentage of the S&P 500. So let's say Google is the biggest and they 10% of the S&P 500. And the next company, Tesla, is 9.5%, and so on and so on. So you go through all the companies. So if you invest money in the S&P 500, then they say, okay, we take your money that you're investing and we're splitting it up percentage-wise into all these different funds exactly the way they are positioned today in terms of their percentages. Then tomorrow evening, when the stock exchange closes, then they go and look at all these companies and they say, okay, Google is not 10% anymore, it's now 9.5%. Tesla is not 9.5% anymore, it's now 9.8%. And they rebalance everything. And that is what an S&P 500 fund does. It rebalances on a daily basis your portfolio based on how the changes has happened in there. So it's called a passive fund because there's no portfolio manager needed to go and make decisions with regards to buying and selling and buying and selling. So that's fantastic. Nothing wrong with an S&P 500 fund. I'm just not the biggest fan of that. I like actively managed funds because I feel that actively managed funds, a portfolio manager can take into consideration the market changes and they can make quicker moves. If they see that Google is starting to lose ground now because IT is just not so fancy anymore, they can get out of it and go into something different. With something like the S&P 500, you're stuck there until the fund is rebalanced to the point where you are in a substantially smaller Google holding, so to speak. So the one thing that I've noticed with regards to this is people do not understand that even those funds do have dips. They go down, they go up, they go down, they go up. And like I say, I just discussed this with somebody. 2020, when we hit COVID, and 2022, the S&P 500 was down substantially from what it was in 2021. There was a couple of years earlier in 2018, 2019 where the same thing happens. So people think that when they go and look at something like the S&P 500, it only goes up. You also have your in-between downturns. So if you do invest into something like that, accept that it's a long-term investment and that you have to ride the waves when the investment starts taking a bit of a dip. So yeah, that's a quick explanation, and yes, maybe I should just say a life investment. You do actually get life investments that invest in the S&P 500 and therefore makes use of these passive funds. There's nothing wrong with it. They give good returns. Personally, I'm just not a big fan. Okay, there we go. Let's see. What is next? Sorry, folks, just trying to find the next one. Okay, money on the mortgage, earnings there. What are your thoughts on a young professional's account? Reese, once again, mate, I have to admit when I don't understand something or know something, I don't know what the young professional's account is that you're referring to here. Let me see if I can find something quickly. Young professionals account. When I Google young professionals account, I come up with all the banks, young professional account, Absa, Investec, Nedbank, and so forth. If you're talking about a bank account, sir, I have absolutely no recommendation or knowledge. I don't work in the bank, so I can't give you any of that. Used to work at the bank many years ago. Not anymore. Can't tell you which is good products, bad products. So can't give you an answer there, Reese. Do apologize, mate. Can give you financial advice and planning, but not bank account information. Then let's see who's next here. Thank you, Konafan. You are pro. I wish I know you way back before, but it's not too late yet. No, Cozy, it's not too late. You've got my WhatsApp number, mate. It's in my profile. Got my website. Go and have a look at our website. We are still developing it, but it's looking much better than what it looked like 3 months ago. And there you can get a bit of an idea of everything that we do. And yeah, send me an email, contact me on WhatsApp, and I will gladly assist you with whatever I can. Okay. Yeah. Sorry to ask a stupid question again, Cozy. Okay, let's see if it's stupid. Sorry to ask this stupid question. Who determines the value of the dollar, euro? Oh, man. That's not a stupid question. That's made for somebody much more intelligent than me. So it's not something that's determined by one specific person. The value of the dollar and the rand and the euro and everything is determined on the open market system that we have in the world. That means it takes into consideration trading, stock exchanges, economies, everything like that. And the determination is basically, at the end of the day, the foreign exchange rate, where the rand can strengthen against the dollar, like we just saw with our elections, because the world enjoyed and liked what they saw that came out of elections. Our rand strengthened. So it's one of those things that I wish I could explain to you in detail how that works, but I would rather just say it's determined by an open market system and by the trading in foreign exchange. And I would rather have somebody that is more skilled in that specific area of money matters give an answer on that. So I will have to see if I can get my good friend Rian Herselman to attend and join me for one of these meetings one evening, and then you can ask him the question again. Okay. Oh, me, myself, and I have 100K. What business can I start? Man, I love this question. So, before I tell you what business you can start, I'm going to tell you what you need to do. because this is the one thing that new business owners don't do, and then they stuff up their business, and then we see the statistic says that only 1 or 2 new businesses succeed. It's because new business owners do not go and sit down and work out a business plan. They do not go and sit down and look at what they're going to be selling, what the value is that they're going to offer, how they're going to market it, how they're going to sell it. They do not go and plan a business before they start a business. So, before you start a business, or before you even start thinking about a business, okay, keep that 100K in the bank and do yourself a favor for the next 6 months. For the next 6 months, go and read books. Go and read books that has been written by businessmen where they explain how to do business. Go and read books on how to motivate yourself, how to discipline yourself, how to go out and market, how to draft a business plan. Go and read books that will enrich you and grow you as a person and get you as person to become a better person, so to speak, to have more knowledge, to have more wisdom. Go and do that, and then go and open whatever business you want. Whatever business you want. Preferably, normally, it will be a business that is in the same area as what your expertise is. But go and open any business. The world is your oyster, my friend. Don't let anybody hold you back. Okay? Cool. What is this? Lady D, I lost 50% of my spouse during divorce. Lady D, normally we lose 100% of our spouse. So I don't know if you're lucky or unlucky. Okay, just joking. You lost 50% of it to your spouse during a divorce. How would I be taxed when I go on pension? So, Lady D, you're going to be taxed as per normal. And when I say you're going to be taxed as per normal, because your pension fund has now been split in two and you had to give 50% to your spouse, your pension fund is now just smaller, but it now has to basically restart the growth process with your contributions. So when you get to retirement now, you will now get that option of 1/3, 2/3, and you will get the 550,000 tax-free on the, and then after that the 220,000 tax, the 27%, is it 27% before I lie again? 18%, sorry, and the next 380,000 rand at 27%. So you will be taxed in the same vein on your 1/3, and then you will be taxed in the same vein in terms of the income, based on how much the income is. And yes, because the fund has now been split in two, your ex-spouse is going to sit with the same situation. So the reason why this is that both of you now have a pension liable to pay tax. And because that was one fund at one stage, when you got to retirement, you would have paid tax on that one fund. Now, because it's split, we still have to pay tax on that one fund, but now it's sitting in two different people's names. And therefore, those two people will both be liable for taxes. Okay. Lady D, hope that helped. I'm sure you wish you had rather just lose half of your spouse. Then you wouldn't have to give him your pension. Goeienaand almal, ek was baie gemis. Sorry, Charles. Jammer man, maar spring in Fridays, whatever. Which province are you in? Stephen Alexander, sir. I am in Gauteng, in Krugersdorp in Gauteng. Born and bred in the Free State, small mining town called Virginia. But I moved to Joburg once I finished school and my army years. And yes, I've been in Krugersdorp ever since. I love the area where we are. I enjoy my company and my business, the people. And I love what I do. But having said that, Stephen, if you want to speak to me for some financial advice, pop me a WhatsApp, send me an email. Details is in the WhatsApp number is in my profile, and I suppose I could give it here as well. Sometimes I remember that on TikTok, if you give out personal details, then they block your messages and they can your account. But yeah, I can do it. The only thing is I haven't written down my number. So just check my profile. That's where my WhatsApp number is. My email address is on my website. Contact me. I can deal with you wherever you are. As it is, I've got clients that actually sits right over the rest of the world, not only in South Africa. I deal with a lot of clients that are in Dubai, Australia, New Zealand, UK. Got a number of clients in the UK. And yeah, everything we do like this, video conferencing, USSD codes, whatever. So that's it. But if you want to come and visit me, Gauteng. Unless I go for a visit somewhere and I can meet up with you. Let's see, what is so that was him asking that. Oh no, Kurt Smits, Naan sê, werk die 2 pot asseblief. Kurt, ag nee man, nee. Hierdie ding is mos nou al hore gery. So Kurt, dis hoe die 2 pot system werk. Die 2 pot system is op die ou einde van die dag 'n beskrywing van hoe jou pensioenfonds in die agtergrond bestuur word deur die maatskappy wat dit bestuur. Okay, dis die eerste ding om te onthou. Want op die ou einde van die dag, jou pensioenfonds geld, onthou 2 pot is van toepassing op voorsorgfondse, pensioenfondse en uitreniteite. Jou 2 pot geld of jou geld wat in jou fonds lê. Maak nie saak in wat die een van die 3 dit is nie. Alles lê in een fonds. So kom ons sê vir argumentsonthaalwe, jy sit hierso en jy het 'n uitreniteit met R1 miljoen in hom. Dan sê die wetgewer nou met die 2 pot system, ons gaan 10% van daai R1 miljoen gaan ons oordra na 'n spaarrekening toe en jy kan die geld uit daai spaarrekening uittrek. Voordat jy by aftrede kom. So daai spaargeld wat jy eintlik moes kry by aftrede, dit wil hulle nou vir jou gee om te doen whatever. Hulle sê is om skuld af te los. Ek dink is nonsens. Anyway, so daai jy jou R1 miljoen, hulle vat 10% is R100,000, hulle sit hulle aan, maar dan sê die wetgewer, jy kan net R30,000 van dit trek. Jy kan nie volle R100,000 trek nie. Dis hierdie jaar se reël. Van volgende jaar af sê die reël, elke bydrae wat jy maak. So kom ons sê jy dra R1,000 'n maand by, dis R12,000 vir die jaar, 1/3 van dit gaan ook in daai spaargedeelte in. So dis die ou 1/3 waarvan ons praat, dis nog steeds die 1/3, maar hulle sê net dit is nou jou spaargedeelte. So nou kan jy volgende jaar, jy R12,000 bygedra, 1/3 van dit is R4,000, so jy kan volgende jaar kan jy R4,000 onttrek, want dit is weer wat in jou spaar is. En so kan jy elke jaar die spaargedeelte trek, die 1/3 wat in die sparing gaan. Of jy kan dit los en nooit daarvan trek nie. En dit is wat ek voorstel, moet nooit daarvan trek nie. Of jy kan dit los vir 5 jaar en laat dit opbou en dan kan jy gaan trek. Maar die bottom line is, die geld gaan in daai spaargedeelte en jy kan dit trek, jy word belas, want jy word belas teen onttrekkingsskale en nie teen aftreeskale nie. So don't do it. Brother, hierdie geld is gemaak of word gegee of word belê met die intensie om eendag te kan aftree. En ek kan nie dit meer stres vir mense nie. Mense dink hulle vat hulle 1/3, hulle gaan koop 'n huis of 'n kar of iets en die 2/3 moet vir hulle inkomste gee en hulle dink dit is wat gebeur by aftrede. Glo my, 99 uit 100 mense trek of nie hulle 1/3 nie, of as hulle 1/3 trek, sit hulle dit in 'n ander inkomsteplan of hulle inkomste te gee, want die 2/3 is nie genoeg nie. So moenie jou geld trek nie. Kort, ek hoop het antwoord jou vraag. Ek gaan volgende week nog 'n video maak op trend, net om almal weer 'n keer 'n bietjie te probeer help. Richard Hoog. Ek het R4,1 miljoen in my pensioenfonds. Ek beplan om van werk te verander. Wat doen ek met daai geld? Okay, Richard, eerste ding is, moet dit nie trek nie. Chom, moet dit net nie trek nie, asseblief. Jy gaan ernstig pak sal kry. So wat jy moet doen, is jy moet dit verkieslik oorsit na 'n bewaringsfonds toe. So wat 'n bewaringsfonds doen? 'n Bewaringsfonds sê, ek het my pensioenfonds by maatskappy X, maar omdat ek waai, wil maatskappy X nie meer na my geld kyk nie, want hulle wil nie die administrasie doen nie. So hulle sê vir my, maak wat jy wil met daai geld. Nou sê ek vir Sanlam of Old Mutual of Liberty of wie ook al die geval maar wees, sit my geld in 'n bewaringsfonds by jou. Dan vat hulle die geld van maatskappy X af, hulle sit dit oor in die bewaringsfonds by die versekeraar, belastingvry dra hulle dit oor, so daar's geen belastingimplikasie nie. Dan lê daai geld daarso in 'n fonds van jou keuse. Onthou terwyl jy by die pensioenfonds is, moes jy in die fondse gewees het wat hulle vir jou gegee het. Nou kan jy self gekies in watter fondse wil jy dit belê. En dit hou aan groei tot en met aftrede. En dan wanneer jy by aftrede kom en jy sê ek gaan nou die geld onttrek, dan gaan jy aftree soos wat die maatskappy X jou sou toegelaat het om af te tree, want hulle het hulle eie reëls, maar daai reëls is gewoonlik in lyn met 1/3, 2/3. Hulle reëls gaan gewoonlik oor kan jy aftree op ouderdom 60 of 65 of wat ook al die geval mag wees. Maar het word gesien dat toe jy die bewaringsfonds gedoen het, het jy die reëls van die fonds saamgevat. So by aftrede gaan jy 'n normale aftrede doen. So dis wat jy moet doen met jou geld. Gaan sit dit in 'n bewaringsfonds, gaan maak seker jy hou dit. Die ander ding is, solank as wat dit in daai bewaringsfonds lê, is dit asof jy nog steeds by maatskappy X werk. So sou daar 'n krisis kom, en hopelik is daar nooit so groot krisis nie, wat jy sê, maar ek het 'n paar rand nodig, ek moet 'n onttrekking maak. Dan kan jy na daai bewaringsfonds toe gaan en vir hulle vra vir 'n sekere hoeveelheid geld. En hulle kan dit vir jou gee en jy betaal belasting daarop en dan gaan jy. So dis asof jy op daai stadium eers effektief bedank by maatskappy X. Ek hoop dit help, Richard. Steven, perfect, I will contact you soon. Baie dankie, I am in Cape Town. Steven, great, mate. Yes, contact me. One of my advisors is actually in Cape Town, and I go down to Cape Town a bit more regularly these days. It's been twice this year. Next year it will most probably be 3 or 4 times. So yeah, I will be there, and gladly I'll meet up with you. Or I'll put you in contact with Almiro, who's sitting down there. He can always help you if you want to see somebody face to face and not via video conference. Okay. Great, Kurt, great. Baie dankie. Ek is bly om dit te hoor, maat. Ek sê vir jou, dit voel elke keer vir my as ek iemand hoor dit sê wat jy nou hier so sê, jy sal dit nie trek nie, jy wou net raad gehad het. Elke keer wat ek dit, is dit vir my soos 'n yes. Ek het nog 'n persoon gehelp om nie finansiëel gereoneer te wees nie. So, ek is baie bly om dit te hoor. Opted for minimum monthly pension from fund, rested full sum in TFSA, RA and shares, okay. Other options. Oh, okay. Opted for minimum monthly pension from fund. So, I take it, my GG, that you have taken a 2.5% income. That's great. So the rest of your fund is now putting portfolios where you can choose nice aggressive portfolios, and at a later stage you can increase the income to whatever you need. If you now took the reinvest, I'm not sure if you're talking about the income here or the 1/3 that you've taken, but yes, either or. If you are now reinvesting that income that you're getting into a TFSA, RA and a share, that's already wonderful. As a matter of fact, depending on what the income is that you are drawing, I don't think that you must look at edible options, because the income that you're getting is most probably just enough to fill up the TFSA, the tax-free and the retirement annuity in terms of the maximum contributions you can do. And yes, if there's some extra and you're putting it into shares, great. If you really want to look at another option, I will say look at alternative investments. Arbitrage, livestock funds, entrepreneur funds, those things are doing very well, and they are very well structured. The risk around those alternative funds is substantially smaller than what people think, and the returns that they are getting is great. So that might be an option. Have a look at alternative investment options. Contact me. I'll tell you a bit more about it. Richard, nee. Baie dankie, kan ek nog baie bydra aan daai bewaringsfonds? Nee. Dis die een ding met 'n bewaringsfonds, wanneer jy die geld oorgeplaas het, dit wat daar is daarso, want omdat jy nie meer werk by die maatskappy nie, kan jy nie meer bydra tot hulle fonds nie. En onthou, jy vat die reëls oor, soos asof jou bewaringsfonds nog steeds by maatskappy X is, hy word net deur 'n ander maatskappy bestuur. So nee, jy kan nie nog ekstra bydra nie, maar as jy ekstra geld het om by te dra, gaan doen 'n ekstra uitreaniteit, want selfs al gaan jy na 'n maatskappy toe wat vir jou nuwe pensioenfonds gaan gee, is die kans baie goed dat jy nog nie die maksimum 27.5% het nie. Of gaan maak dan gebruik van 'n life investment wat vir jou meer likwiditeit in jou portefeulje gee. Tax-free investment is nie so in nie. Effective trust as jou belasting nie 'n te groot probleem gaan wees nie. So ja, en ek hou daarvan om nie altyd alles in een belegging te sit nie, want diversifikasie, een van die wonderlikste dinge in die lewe om risiko 'n bietjie te versprei. Okay, I think this is the last one I'm going to be able to answer. Gerwin Rockman, are you a financial advisor? I am indeed, sir. That's why I keep on telling people about this stuff. Although, everything that I discuss with anybody, whether it's on my TikTok channel, whether it is on this live event, is not advice. And why I say it's not advice, I have just advised that gentleman that he must move it over to a preservation fund. So I'm willing to say that to somebody, but I will not give the gentleman advice as to which preservation fund he must use, or what he should do with the rest of his money, or the money that he says he wants to invest. I'll tell him products that I think he can invest in, but I won't say to him, you must do X, Y, and Z. And the reason why I'm saying it's not financial advice is because I can only give financial advice once I have gotten information from a specific client. I need to speak to a person and get personal information because every person's situation is different. And I can only give real advice once I understand your personal situation, what your needs is, etc. Cozy, what are the disadvantages of buying property cash versus bond, considering tax cash implication? Well, if you've got cash, be that in the bank or in an investment or whatever the case might be, then you could go buy a property cash. As a matter of fact, I offer somebody cash for a property, you'll most probably get the property at a better deal because cash is king. If people can get cash, they are very happy. Yes, I don't think you can take them a suitcase full of 2 million rand because nobody wants to keep that anymore with all the FICA legislation. But if you're going to offer to buy somebody's house, cash and contant, without them having to wait for bond approval or whatever, you're most probably going to be able to negotiate a better deal. And I don't see that there's any disadvantages. I might be wrong. Maybe there's something that somebody knows. But I can't see that there's any disadvantages buying a house cash versus a bond. I mean, if you're going to buy it on a bond, for as long as it's bonded, it's not your house. It's the bank's house. Only becomes your house when you've paid it off. You're going to be paying interest on that bond. And you're going to be paying it for a long time. And if you go and calculate how much it is, it's a shitload of interest. So, no. Go and buy a house cash if you can. I'd much rather buy houses cash than bonded. Okay. So, let's see. Charles, I know cash and contant sounds great. Bart, thanks for the haircut. It was tyd vir 'n change gewees, maat. Okay, ladies and gents, it's been fun. It seems like this thing is going to work. We'll do it again next week, Tuesday. Pop in, kom sê hallo, kom vra, dink aan wat jy wil vra hierdie week. Kom gesels met my. En as daar enige vrae is wat ek kan antwoord nie, by all means. Ek sal julle met die grootste plesier help. What the hell? Okay, I don't understand. In any case, ek sal julle met grootste plesier help om vrae te antwoord wat julle nie van antwoord uit gekry het nie. Lekker aand vir julle, lekker week, alles van die beste. Cheers.